Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, registered financial consultant, your social media insurance bro. Back again today to whap and tap on your head with yet another ADH Wealth Solutions article. Today, we're reading an ADH Wealth Solutions article written by none other than me. I initially placed it inside of a Facebook group called ADH Wealth Solutions Articles. Before I continue, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So the title of this article is Life Insurance Commission Structures Exposed. Understanding how life insurance professionals get paid, it's a comprehensive guide to commission structures and industry distinctions by ADH Wealth Solutions. The life insurance industry operates on a complex commission structure that varies dramatically depending on where an agent operates within the distribution chain. Understanding these differences is crucial for both consumers choosing an advisor and professionals considering their career path. This article will provide a detailed examination of commission structures, the critical distinctions between legitimate agency ownership and MLM-style operations, and the professional recognition that separates top-tier producers from the rest. Street-level commissions, the foundation of professional compensation. Street-level commissions represent the baseline compensation rates paid directly by insurance carriers to agents. These rates typically range as follows. For term, street level is 40 to 60% of the first year premium, and your renewals are 2 to 5% annually. For whole life insurance, it's 80 to 110% of the first year premium. Your renewals are generally 3 to 10% annually. They're higher in your first 2 to 10 years. For universal life and IUL products, the street level commission is between 90 to 105% of first year premiums. The renewals are 2 to 5% annually. These figures represent what insurance companies pay directly to qualified general agents and established agencies with proper carrier relationships. So as an agent, you might not see that 90 to 105. You might be capped at 50 or 70 or 90%. Now, this source is from nerdwallet.com. Reports that legitimate agents typically receive 60 to 80% of first-year premiums, with smaller renewal commissions in subsequent years. Now let's look at true agency ownership versus MLM team leadership. Legitimate GAs are general agents. A true general agent owns their agency and has direct contract with insurance carriers. They hold direct appointments with multiple insurance companies, set their own commission structures for downline agents, have ownership equity in their business, can sell their agency as a tangible asset, and typically maintain professional designations and industry affiliations. The MLM masquerade. Team leaders posing as agency owners. Many professionals working within MLM-style IMOs or independent marketing organizations like PHP Agency, GFI, Global Financial Impact, FFL, Family First Life, and Experior are marketed as agency owners when they are actually team leaders earning override commissions. These individuals do not own their client base or distribution rights, cannot sell their agency as they have no ownership equity, receive inflated commission contracts, often 120 to 140% of street level, subsidized by the MLM hierarchy. They have limited carrier relationships controlled by the parent IMO. They often make false claims about going public or equity ownership opportunities. Research shows that Family First Life offers commission structures ranging from 80 to 145%. This is from ProMLMsoftware.com, a blog that shows the Family First Life comp plan, well above street level rates. This is possible because the MLM structure allows the parent organization to subsidize individual agent contracts through the recruitment and override system. Professional recognition, MDRT, and industry associations. The $1 Million Roundtable Standard. MDRT represents the top 1% of financial professionals globally. For 2024, the minimum requirements are, in the commission method, 67,000 in eligible commissions. For the premium method, 201,000 in eligible premiums, and the income method, 120,000 in annual gross income from insurance and financial products. Critically, MDRT qualification requires legitimate street-level commission structures. MDRT membership information at mdrt.org/join. MDRT specifies that all commissions and premium credits must be properly documented and verified. Why MLM agents don't qualify for MDRT. Agents with MLM-style IMOs face several barriers to MDRT recognition. Inflated commissions. Above street-level commission contracts may not qualify for MDRT credit calculations. Limited product portfolio. MLM organizations often focus on limited product lines that may not generate sufficient qualifying production. Documentation issues. The complex override and bonus structures may not provide the clear commission documentation that the MDRT requires. Professional associations and designations. Legitimate insurance professionals typically maintain affiliations with organizations such as the IARFC, which requires a minimum of 3 years of full-time experience and proper licensing, the NAIFA, National Association of Insurance and Financial Advisors, and industry-specific designations such as CLU, CHFC, CFP, etc. These associations require ongoing education, ethical standards, and legitimate business practices that many MLM-style operations cannot or do not support. The Primerica exception. While Primerica operates similarly to other MLM-style organizations in structure, it differs in several key ways. It is a publicly traded company, New York Stock Exchange ticker symbol PRI, with its own underwriting capabilities. Primerica Life Insurance Company underwrites its own products. The company doesn't make false claims about going public since it is already public. Agents can purchase actual company stock through normal market channels. According to Primerica, representatives start at 25% commission and can advance to 50% after recruiting 3 others, representing more conservative street-level equivalent rates. Stock ownership in IMOs. How could it work? Some IMOs, particularly PHP agency under Patrick Bet-David's leadership, have discussed potential stock ownership for agents. Here's how legitimate equity compensation could function. Performance-based equity. Top producers receive actual company shares based on production and recruiting metrics. Vested ownership. Agents earn equity stakes that vest over time, similar to traditional corporate structures. Profit sharing. Agents receive ownership percentages tied to company profitability. PHP was acquired by Integrity Marketing Group in 2022, with Patrick Bet-David becoming a managing partner in Integrity. This type of acquisition can provide legitimate equity opportunities for top producers within the organization. The recruitment reality. All companies recruit. It's important to note that all insurance and financial services companies recruit new producers. The key differences lie in traditional companies that focus primarily on individual production and client service. Recruitment bonuses are secondary to personal sales. Professional development emphasizes product knowledge and client relationships. Commission structures remain relatively flat regardless of recruitment. MLM-style IMOs heavy emphasis on recruitment as primary income strategy. They have complex override structures that can exceed professional production income. Training focuses heavily on recruitment techniques. Commission advancement is tied directly to downline development. Red flags and warning signs. Professionals and consumers should be aware of these warning signs. Promises of agency ownership without clear equity documentation. Commission rates significantly above street level, 130 plus for new agents. Heavy emphasis on recruitment over client service. Claims about the company going public without proper SEC documentation. Lack of professional designations among leadership. Absence from legitimate industry associations like the MDRT, NAIFA, or IARFC. The path to legitimate success. For professionals seeking honest growth in the insurance and financial services industry, consider these factors. Seek employment with established general agencies or broker-dealers. Pursue professional designations and continuing education. Focus on client service and ethical business practices. Build relationships with multiple carriers for product diversity. Maintain transparent commission structures. Affiliate with legitimate industry associations. The insurance industry offers tremendous opportunities for ethical professionals who focus on serving clients rather than building MLM-style downlines. Success in this industry comes from expertise, integrity, and genuine client service, not from inflated commission promises or false ownership claims. If you're ready to grow ethically in financial services, if you're a potential client seeking honest financial guidance or a representative who wants to build a sustainable career based on integrity and professional excellence, we invite you to connect with me, Alonzo Hall, a registered financial consultant. As a registered financial consultant with legitimate credentials and industry recognition, I, Alonzo, represents the ethical standard this industry needs. Whether you're looking for comprehensive financial planning services or exploring a career path built on genuine professional development, reach out today to discover what honest financial services looks like. Contact Alonzo Hall, registered financial consultant, for ethical financial services and career opportunities that prioritize your long-term success over short-term recruitment schemes. ADH Wealth Solutions, an affiliate of CG Wealth Solutions Group LLC, is committed to transparency, professional integrity, and honest financial guidance in an industry too often clouded by questionable practices and inflated promises. So that's going to be it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.